Welcome to another episode of Business Bros. Woo! What up, ladies and gentlemen? Happy, what are we, Thursday? S-H-I-T?
S-H-I-T. So happy it's
Thursday.
2020.
Oh, okay. Different one. Hernan Cias here, host of the Business Bros podcast, along with my co-host,
The insurance bro, James Cias with Pipeline Insurance. And as always, we have another exciting guest.
We have a cool series.
We have an awesome series. Okay, well, here, for the intro. All right. Today, we are welcoming back to the show a previous guest and one who will be visiting us on a regular basis to kick off 2020. The Business Bros Pod is proud to partner with Invictus Advisors to bring maximum value to our audience. Learn with us today as we kick off this 5-week series where we tackle personal finance from some of San Diego's most expert financial advisors. Join us today as we gain clarity and vision in 2020. From Invictus Advisors International Consulting Group, please welcome to the show, Vidal Espinosa.
Hey, what's up? Hey. Thank you for having me.
Of course, man. I'm excited to get this thing off and rolling because so much valuable information coming in. It's 2020. Everybody wants to do great, amazing things in 2020. They have big plans, huge aspirations, and now it's time to knock them down a little bit and bring them back to earth. Let's get our fundamentals right so that we can achieve those large dreams that we're looking for, right?
Right.
Heck yeah.
I have one piece of advice before we start.
Yeah, go for it.
Everyone has new goals, new dreams, new commitments. Okay? You're not going to do it on your own.
Absolutely not.
At all. So forget about writing them, putting them in your pocket, or putting them in your nightstand. Don't do that. Put them out to the world. Get an accountable partner. And make sure that they're in your getting on you if you don't commit to that.
Accountability partners.
Accountability.
They're aware of what it is that you want to achieve.
You just tell them.
They have to know.
Yeah.
I'm like 100% behind you on this. One of the big things that we're pushing this year is you need to have a team, right? And building a team is vital. Building a team is essential if you want to build something greater than yourself, right? Because you can build something really good that's on your own and be self-employed and be sufficient and be cool. Understand that at that point you're going to hit a plateau. Yep. There's only so much that you can do in one 24-hour period. Yep. And if you want to go beyond that plateau, you need a team.
You said a word, self-employed.
Yes.
Self-employed doesn't mean that you do it on your own. Doesn't mean that it's just you. You do need a team.
You need a team.
You need a team that knows more than you knew.
Let's be honest.
Yeah.
Like I look in the mirror and I can see that I'm a pretty smart dude. You know, I've done a lot of stuff. I've learned a lot of things.
So very humble.
So, yeah, right.
We all have.
But we all look in the mirror and we see, what we can be. But don't let that be the limiting factor. Just because you are not doing something doesn't mean that somebody else can't do it with the same passion, the same skill set as you can. You got to be able to hand some stuff off and trust, but verify. Trust, but verify that it will get done. That it'll get completed.
Yep.
Right. Well, let's jump into our topic today. So, what was the first thing that we wanted to talk about in this series, like in getting things in order? Because all too often, like we're talking about this individual that gets started, they go out and they do the one thing that they know how to do, which is, I don't know, whatever skill set that they're looking for. And they do a good job and they get paid. And then they get paid and that money goes
Where?
To
your pocket, to your wife's checkbook.
That's my house right there. That's where it goes right there.
Pay off your credit cards. Well, it's very simple. We all want to get our finances in order. At least some people that I know. But most of us do not take action. And I have one business and personal tip that you can do, very simple, in order for you to know if you're being profitable or not, either in your household or in your business. It's very simple.
One simple trick.
One simple trick.
Okay. I want to hear this.
2 checking accounts.
2? I already have 2. I have my checking account and my savings account.
One thing is a savings account. It's 2 checking accounts.
Okay.
And it's very, very simple. You need to know how to use them, though. The first one, we actually call it the funding account or the income account.
Okay, what goes into this account?
Everything that you collect, everything that your paycheck, anything that comes in money to you.
Okay, is this from a business or is this just in general?
Personal in general.
Okay.
Well, you have to separate business from personal. Okay, so but if you're individual and you're running a household, have 2 checking accounts regardless. One goes your payroll, okay, and then the second checking account, you're gonna transfer the minimum amount required to survive or to pay off your bills for that month.
That's funny. You know what? I don't know, maybe because my degree's in accounting and stuff. I don't know. I didn't actually plan to do it that way, but that's how we operate. Like I'll give the audience a little share snippet. So when my wife and I started our own, venture, we got married, right? That's a venture on our own. We had to figure out how to do our money. And so we each had our own checking accounts, but we decided early on that we were going to live off of one paycheck. And so my wife's paycheck, that goes into the account and it pays, all it really does is pay the mortgage, pay the bills, everything that gets paid. And that's it. The only thing that comes out of there other than those expenses are 10% off the top. It goes into a separate account, and it's a funding account, exactly like you explained. But it keeps everything kind of in one spot. I don't have to worry about, will my cell phone bill get paid? I don't have to worry about, will my mortgage get paid? It's all set on autopilot. But that other account, that's a special account. What do you do with the other account?
The other account, it's your expense account. It's where the mortgage is going to come out, the rent's going to come out, the credit card payments, everything that you're going to live on, it comes out of from there. So you transfer either each week or once a month to that expense account. What it's going to do, it's actually going to help you budget for your living.
So you're sticking to it.
Yes. Don't open more than 2 checking accounts. Don't go ahead and open a savings account, a tax account, a Christmas account, a vacation account. Don't do that. If you can master 2 accounts at the beginning, don't go ahead and go opening 5, 6, 7 accounts. I've seen that and it creates a chaos.
Yeah, I've had that issue too.
I'm going to transfer 10% of my income for this, 20% for that, blah, blah, blah. You're not going to do it. You're going to do it the first month, the second month, and then it's like, oh, you know what? I have this. I'm going to do it. I'm going to replenish it next month. And that month never comes.
No, you never replenish.
No, you never replenish. So 2, I've found out that in my experience that it's enough, even for businesses. We have clients that have 5 checking accounts. It does not work. Really, it does not work if you don't have the discipline and the commitment to do so. Plain and simple.
I have a couple different corporations, but in one of them, almost all of them have the 2 checking accounts because I've noticed that too. It's very nice to have that squared away, a little bit separate, the checking account where you pay your bills. I have another one where I opened a 3rd account, and just to add, to your example, it doesn't do anything.
It doesn't do anything.
It's got like $2,000 in it. I think it had $2,000 in it all of like 2019. And the idea was to start separating things. But I did exactly what you were describing. I opened it with an intention. And then as the year went on, I didn't follow up on that intention.
Life happens.
It was a great thought. It was a great theory, but no action was taken.
And it's very simple also. It actually helps you determine your profitability. If you don't have accounting, if you don't have a set of financial statements, you can just subtract and add, period. Whatever is in your funding minus your expenses, the difference, just from those 2 bank statements, it's what you're making, your profit.
That is simple accounting.
That's very simple.
Now,
plus and minus.
So because we're gonna dig a little bit deeper here, right? So that I like that. So I make money. It comes into one account. I take what I need to pay off my expenses. I put it in the other account. What's left over in that account is essentially my profit.
Just leave it there. Yes.
Just leave it there.
Just leave it there.
So
don't transfer it to a savings account. Savings account's not gonna pay you anything. It's just gonna create a chaos. It's just gonna create another burden. That's it. Just leave it there. Because the savings account is going to pay you 0.01%.
It's ridiculous.
A year.
Yeah.
A year.
It's ridiculous. A couple pennies here and there. Not worth the effort.
Not worth it.
Okay, so then the natural question that people tend to ask is, well, then how do I get paid? Right? How am I going to keep my money? How am I going to pay my bills? What account is that going to come out of?
You pay your bills from the expense account. So we're calling one account the income account, a funding account. And the other account, it's called the expense account. That's where you pull out everything that you're going to use for the month. Your credit card payments come from there. Your car payment comes from there. Your mortgage comes out from there. Your groceries come out from there. Everything, your utility bills come out from there. And we're talking about a household. But if you're a business, as you are, everything that your clients pay you, it's deposited into your funding account. We tend to pay bills twice a month only. That's because we have a discipline of only paying, and it helps us manage our cash flow. Period.
So you're physically writing checks still?
No, we're not.
Okay.
No, we're not.
I was like, you're paying bills that way?
We write checks for some of our clients because they're old school.
Mm-hmm.
But in general, we just send
EFTs or bill pays or whatever.
Yes. And it comes out of our expense account twice a month. And we have actually helped our clients manage that way because we've seen clients pay bills every day. Like, dude, come on. Why are you paying your vendors as the invoices come?
You know, there's a 30-day, 60-day, 90-day wait period on some of those.
Your clients don't even pay you as they get their invoice. We had a client, my very first client, they were vendors to Disneyland.
Oh, that's nice.
And they were the only company in Southern California that had color plants.
Color plants?
Uh-huh. So they sold all the color flowers and plants to Disneyland. And they were on a 30-day invoice. Disneyland took 180 days to pay every single invoice, regardless.
They laid down the law. That's
Yeah.
it. This is when we pay bills. You can be part of our network. You can be part of our, sales rep, but it's 180 days from product delivery to.
I think it's worse than the government.
Yeah. but that check's not going to bounce.
Yes.
So I mean, let's recap that for the audience. So what you're saying is don't pay your bills right when you get them.
No,
right?
Wait, because you get your payroll at least twice a month.
Mm-hmm.
Okay, so just project, plan. Don't pay your bills immediately as they come in. Every bill, even your credit card statement says due by this day. Then you have 10 days grace period to mail that check or send that bill pay through your bank. Utilize that feature from your bank. It's a free service.
So let's talk about the benefits there, because a lot of us have always grown up with, I want to pay my bills on time because I'm going to get hit with, it's going to affect my credit. I don't want to have any late fees, all this other things. And when we're talking about personal things, personal credit cards, we're talking about personal car payments, we're talking about, your own cell phone payments. Yes, you want to make sure you pay those on time. Yeah. Those are affecting your personal credit. But when we're talking about business, it's a different ballpark, right? We're talking it's a whole different. The rules are a little bit different.
Yeah.
And will it affect your credit? Will it affect? I mean, at that point, you have established relationships with your vendors, right? So there is a process to things. Paying your bills on time doesn't mean the same thing. You do want to make sure your vendors get paid,
right?
But there's also something that you're dealing with in your own company, which we call cash flow.
Yeah.
Right. And making sure that you have enough money to pay some bills. I've run into this myself, and it sucks when it happens and you get really scared. And now, I put reserves and stuff in place to make sure it don't happen. But when that time comes to pay your employees,
payroll and taxes are the first thing that you need to put aside in your business.
Absolutely.
Payroll and taxes. That's it. Everything else, they can wait based on your cash flow influx, which means it's whatever money it's coming into your company. So that's why we recommend to pay twice a month, 15th and the 30th. Or whatever dates you want.
So why do you think it is that people don't operate like that in business? That they don't, they don't work around the vendor lists, and they don't work around their grace periods and their net due periods.
How much time do we have? I think maybe, let's say, like for us, for Mexicans, it's cultural.
Mm-hmm.
I personally don't like to owe money.
Yes.
Period.
It's a weird feeling.
If I have the money, I'll buy it. If I don't, I hate credit. But in my business, credit is the king.
Mm-hmm.
Okay? You utilize somebody else's money to grow your business. Not on the personal side. You utilize your money to live your life.
Walmart is huge on that.
Oh,
I mean, their entire business model is based on leverage.
yeah. Do you know what's a number one cause of business closures? 87% of business fails because of cash flow.
And it's not, and just to clarify for people, it's not that you didn't make enough money throughout the year. Like, you might be making a good revenue base. You might have enough money coming in. You're just not operating in whatever fiscal cycle that you have for your particular business. And every business has a different operating cycle, right? I mean,
money
you just said
goes
that.
out and left and right,
Yeah.
left and right. You don't control your money. It's your money. You need to control it. Your vendors don't control your money. You control your money. That's easy. You control your money only if you know how to control it. But you started it your business because you know how to bake cakes or build funnels or do whatever it is that you're selling to your clients. But you didn't start your business because, let me get into human resources. I'm an expert in accounting and taxes. Let me do accounting and taxes. Hell, I don't even like doing my books, but I have to do it. But I didn't start my business because I love doing books or I love taxes. Well, I do love taxes, but that's another topic. So
You're one of those weird ones.
yes. But I have no idea on marketing. I have no idea on anything. And I'm not going to do it on my own. I didn't start my business because, I want to go into marketing. No, I don't. So you need to be expert on what you started your business on. Let somebody else handle that. But if you don't want to let somebody else handle that, 2 checking accounts are plain and simple. Very easy. Learn how to do it. Master it. If you're going to do something, master it. If not, let somebody else do it.
Okay, then let's go into some of the details that I know I get questions like this all the time. Okay, I'm going to get 2 checking accounts. Where do I go? Do I go to a credit union? Do I go to a commercial bank? Like, what's the best place to go to open my 2 accounts? Do I have to have them in separate banks? Is it better to have them in the same bank?
I'm going to sound very biased, but we love working with Bank of America. And I'm going to tell you why. Bank of America is not a great bank. Okay, they have a lot of flaws and everything. There's people that are going to say, I hate Bank of America. But they have the best online banking system that there is out there. Okay, most of the bank accounts or banks have the same fees for your checking accounts, either free or $8. That's what I've noticed. That's the average. But their online system or online banking, it's amazing. Once a month, generally, you need to reconcile your banks. Meaning you need to go into your bank account and make sure that every single transaction that it's in your bank account, you account for. You recognize it. You are aware of it, and you know that you did that transaction, or at least you inquiry about what that transaction is. Maybe it's a bank fee. Maybe it's a levy. You don't know. But make sure there is. So Bank of America online system has a clear reconcile button for each transaction that I have not seen on any other portal. Mind you, we
Kind
have...
of like QuickBooks does?
Kind of, yeah. So you can reconcile your bank account right there on your online banking platform.
Oh, wow.
So we have seen online systems like for over 35, 40 banks, and none of them other than B of A has it. So it's very simple, very, very, very helpful. And they also have one of the best migration systems into QuickBooks. So if you're using QuickBooks, at least use QuickBooks Online.
Yes.
That's very easy.
Syncs up nicely.
Yes.
No, that's huge. I mean, I'm trying to teach 17-year-olds the value of going through your online statement and making sure that the transactions that occurred in your bank account are actually the ones that you made. I go through this nonstop with people all the time, and I use the Netflix example because it had happened to me. I was going through and reconciling my books, and just, I went through and I was like, okay, Netflix, check, Netflix, cool, whatever, all of the different descriptions go through. But I noticed that it said Netflix.com on my bank statement, but the dollar amount was like $14.73 or something, some weird number, and it didn't quite match up. And then I'm looking through and I was like, wait, they charged me like 4 or 5 times, and they're all weird numbers. right? And the bank doesn't recognize it. The bank recognizes it as a transaction. If I had not been reconciling, if I had not been going through and matching up what I actually spent with what the bank actually has, I would have noticed, the about $100 in quote unquote Netflix fees that were being fraudulently taken out of my account. And it wasn't even Netflix. And that's the key. It's somebody else hiding transactions within your account because you're not paying attention.
The time is 20 minutes and 22 seconds. I was trying to do 2020.
Oh.
You're up by 2 seconds.
I was off by 2 seconds. We interrupt today's regularly scheduled #1 podcast in San Diego for a purely selfish, completely irreverent, sell-out cash grab word from our sponsor. Hernan, what are we selling today?
We had the opportunity to go to one of the Feed the Kids, All About the Kids Foundation over the break. You guys had donated a bunch of brand new pairs of shoes, and so we went to this event. We were able to give out, a bunch of food. I think they ended up feeding like 450 families that day, something like that. It was a lot of families, and we got to give away a lot of shoes. So I wanted to say thank you to you guys for your contributions, and remind all of you guys, it's not just Christmas; it's all year long that people like this are in need of food or clothing or whatever you guys can contribute. So if you guys have a chance, go to it'sallaboutthekids.org. And if you have, funds you want to volunteer or you want to donate, you can do that. If you just want to donate your time, they're always in need of people who can come out, hand out, fold boxes, hand out food, whatever it is, a couple hours once a week.
Carry boxes to cars.
Carry boxes to cars. It's really heartwarming, so I want to make sure you guys go out there. It's All About the Kids is our show sponsor for today, so make sure you guys check them out. It's All About the Kids charity at Instagram, or It's All About the Kids on Twitter. It's allaboutthekids.org/feedthekids.
Hey, and they don't know this. I just came to know about that. If any of the listeners sends you the information that they've donated, we're going to match up to $500.
Oh, nice. That is awesome. We love that.
So generous.
Yes. So
it's all about the community.
Oh, 100%.
It's about the community. We are so grateful and thankful for all our clients and the community that we would do anything that it's necessary. So we'll match up to $500. Just send you guys the information that they've donated, and we'll do it.
Awesome.
Wow.
That's amazing. So it's all about the kids, ladies and gentlemen. We're going to push that a little more this week.
Yeah, we are.
Or actually through the month of January, because we got you guys here for a 5-show
weeks.
series. So awesome.
Outstanding. And now, back to that #1 podcast in San Diego, the Business Bros Pod.
So we were talking about the Netflix thing and just understanding that it's your personal responsibility to go through.
It is. You said the right word. It's your own personal responsibility. The bank just holds the money on your behalf. It's your money. It's your bank account. It's your responsibility to check every single transaction there you've done. You approved. You requested it.
And we're coming into tax season. And there's going to be a lot of people who kind of, hide away legally or illegally from filing government tax returns, whether it's their 1040s or their state returns, right? They're going to be hiding away. And I always give people the same advice every year. Do not ignore the state of California and do not ignore the IRS, because one of the things they can do, by the way, and since we're talking about the bank account, is they can come in and levy, sweep, cash out your accounts without you even knowing.
Yeah.
And sometimes it's little things that you don't notice, like maybe you had an overdue parking ticket, or something that you hadn't settled, and it swipes from your account.
Do you know that the IRS is the only entity legally that they can take up to 80% of your income without any court order or anything?
That's scary, huh?
Every other entity or debt, it's 20% only. The IRS is up to 80%. They don't care if you go homeless. They really don't care.
That's gangster.
But the IRS is out there to help you. If you have a huge debt, just communicate with them. On the other hand, the state of California, don't mess with the state of California. Because they will come and freeze every single thing you own.
Yeah.
Don't mess with the state of California.
That's...
The IRS, to compare to the state of California, they're amazing.
Yeah. Well, I mean, you said it. It's true though. It's true. The state's scary. The state is no joke.
The IRS will abate or condone your penalties. The state of California, they have nothing to condone or abate your penalties, unless you die. but your state will pay for that.
Well, I'll give you a story on that. So I had this cleaning company that I didn't really want to start. I kind of started it to help my mother-in-law with work and some cousins that needed work, right? It kind of just fell in my lap. I created this company. Eventually, I got to the point where I don't really want to deal with this company. It wasn't what I wanted, right? I kind of just handed it off, right? I handed it off. That person didn't want it anymore after a while. I dissolved the corporation, shut it down. Well, for whatever reason, the state of California didn't get all the paperwork correctly or whatever. And I got this letter in the mail saying, by the way, since you didn't file a tax return, we went off and took the industry standard and we created a return for you. You owe us $1.2 million in back taxes. I was like, what?
Without deductions. They take no deductions.
Well, they even calculated the general income because that company never, I think the most they ever made in 1 year was like $70,000. So it's not like it made a great
And guess
money.
what? It's now on you to prove to them that you had no income.
Exactly.
Because the burden of proof is on you, not on them.
California, I mean, you think the IRS is scary. California is super gangster.
And the state of California would snitch on you to the IRS.
Oh, yeah.
And once you do the IRS, the state of California, then the IRS is going to come after you.
So on the one side, we can villainize them, right? On the one side, we can villainize them. On the other side, though, like you were saying, the IRS and the state, as long as you don't ignore them, most of them are going to work with you, right? They're going to work with you. Whatever your affordability is, I always tell people, I don't care what it is, send them $20. The point is you're not ignoring them. They're going to send you a letter back and we're going to negotiate, whether you negotiate based on your income, all these other things. You can do an offer and compromise with the IRS, all these different options, but do not ignore them.
Yes. You said the right word, $20. Just send them $20, send them whatever you can, because if that case goes to court with that payments, you can prove that it was not fraud or tax evasion.
Say that again.
If you owe taxes to the IRS, okay? And it's a huge case, or your case goes to the to courts by you proving that you had the intent to pay them at least $20, they cannot charge you with tax evasion or tax fraud,
which is a jailable offense.
That's a federal offense, punishable with 5 years in prison, or up to 5 years in prison, or $500,000 in penalties.
And that's huge.
That's
I always use the Wesley Snipes or the Al Capones of the world. I'm like, they're not going down for things they did malicious to other people. These are blue collar things. These are you making money and not
what did
ignoring
Wesley Snipes do that was malicious to people?
He didn't do anything.
Aside from vampires.
Oh, yeah.
Well, that's why he just didn't pay Uncle Sam.
He just didn't pay Uncle Sam. But that's the big thing is it didn't matter. He didn't have any malicious intent, but he went to jail nonetheless.
Yeah,
and that to me is a scary thing.
And you can blame your accountant, your tax attorney, or whomever, but ultimately it's your responsibility. Period. Ultimately it's your responsibility.
I say it all the time. There's this little line at the bottom. It's got some fine print on there.
Once you sign that tax return, you're done.
You're
That's
done.
you. It's your responsibility.
Yeah.
Not ours.
Such a scary thing. All right, so if I'm going to get my business started right now, because it's 2020, I'm off, I'm rolling.
Let's
like
go.
going to the
New
gym.
decade, new me.
New decade, new me.
Have an accountable partner.
Step number one is we're going to open 2 checking accounts.
Yeah.
Right? And you recommended, bias, whatever. I'm at Wells Fargo, but I really do like the feature you said. Go to Bank of America.
Go to any bank you want.
Any bank you want, but
Really.
Bank of America has that online feature.
Yeah. We love that. Wells Fargo has the other option. They don't have that feature, but they have the recurring monthly payments that you have. You can see it. So what I recommend some people, some of our clients and to do and personally is, you know what? Every 6 months, say, hey, you lost your credit card, that it's associated to that account that your payments come out of. So you can re-sign on for the payments, for the recurring payments. Because you don't know.
You're talking about subscriptions.
Yeah, it's for the subscriptions. Because you don't know.
That's a very good idea.
You don't know how many subscriptions you have out there that you're not using at all.
Yes.
Like the gym membership.
Right?
New decade, new me, I say.
That's you. There's other people that they have like 5 Netflix accounts. Why you need 5 Netflix?
Well, yeah. That's because 4 of them were fraudulent. I just told you that. No, I'm just playing. No, that's actually great advice, though, is to cancel the cards.
I think on top of that, it makes you kind of look at things and you're like, you know what?
I didn't actually use that.
Yeah.
Yeah, you'll get an email from say, hey, can you update your credit card? Then go through, and then you'll see, oh, why am I not using this system or this program or this membership? You just go ahead and cancel it. And Just talk to them and say, hey, I have not used it for the last 12 months. And they might even give you a refund.
It's possible.
It's very possible because they are going to want you to come back to them.
Mm-hmm.
Trust
to
me.
live on good terms.
Yes.
Yes.
They'll probably give you 3 months for free, which you don't need because after 3 months, it's going to happen the same thing.
Yeah. Well, yeah, it's true. It's true. But they also want you to leave on a good note because if you're happy, you're going to talk about them in a good light. Versus if you're sad, you're going to talk about them and it's not a good light. And everybody wants to have that good referral business.
Yeah.
That's some great advice. Okay, so advice number 1, 2 checking accounts.
2 checking accounts.
Right? Make sure it's online banking, which most accounts do, but Bank of America has a good one. Next one, if you're already established for a while, start canceling your cards every 6 to 8 months or whatever, just to renew your subscription base.
Just do it right now.
Yeah, that's a good idea.
New decade, new you.
Besides, the new cards that they send out are looking cooler. So
yes,
that's true. I can get a Marvel one now.
Have you seen the Mac one, the Apple one? It's just white and
with an apple.
Chip. Yeah,
I always like my Amazon one. It came in, it's like a little metal card.
Oh yeah.
And I was like,
same
oh,
as
ting,
the
ting,
Amex.
ting. Yeah. And I was like, oh, and it's black, so it looks like the black Amex
Oh
card.
wow.
It's not. It's an A, but it's an Amazon. I'm not that cool yet.
Hey, IRS, it's not because of my income.
Yeah, it's not because I'm not the 1.2 mil. I don't know you guys. No. Okay. So, all right. So we start our business. We're gonna renew some cards, and then what's another little thing that we can do to just get started? Do I absolutely? And this is gonna kind of lead into some of the other ones. Do I absolutely need to incorporate right off the bat? Do I need to? Is it okay if I stay like a C corp? Like, what's the deal there?
You know what? In my opinion, I would say if you're starting a business, incorporate, whether it's a corporation or an LLC. I know it's going to create a burden. I know it's going to create some additional obligations that you don't have as a sole proprietor, but your mindset is going to change.
This is a burn the ship strategy.
Yes, your mindset is going to change. You're going to say, hey, I'm a corporation. X, Y, and Z Inc. Oh, wow, I'm a corporation. Your vendors, your clients are going to see you as a trustworthy entity. You're an entity. Right, so I recommend go ahead and do it. Now, the entities are either corporation or LLC. Now it's up to you whether you decide to be taxed as a C corp, as an S corp, as a partnership, or as a sole proprietor.
And we're going to get into those discussions.
Yes, that's different. People, an S corporation does not exist. It's not exist.
It's you.
An S corporation, it's a
Are you talking
tax.
about S-card? Sorry,
It's a tax benefit.
Pass-through entity.
It's a tax benefit. It's not a entity. The entity, it's a corporation or an LLC. That's it. Okay, so
you're talking about, because I was confused there for a second. You were talking about a subchapter S.
yeah,
Okay.
yeah, an S corporation or a subchapter S, it's a tax benefit. There's no such thing as, hey, can you create me an S corporation? Yeah, I can create you a corporation or LLC. Then we can tax you as an S corporation. No. Somebody recommended me to be an S corp. I want an S corporation. Well, actually, the state of California does not issue a articles of incorporation or articles of organization as an S incorporation. Okay, so we'll get into.
So that. I wanted to give you the other side, because I mean that's a good strategy there, where incorporate. This is burn the ships. You're all in. This is what you're doing.
Yeah.
So go all in and do it.
Yeah.
Because I often give other people the other side. I'm like, look, the corporation the state's going to charge you the $800 a year, right, to incorporate, whether you make any money or not.
The first year you are tax exempt from
the first year, but going forward, and so for me, I always talk about the difference between the liability aspect of having a corporation or an entity at your side versus not having the liability. And so so sometimes I advise, because people don't want to go through that whole process. I'm like, well, if you're gonna stay an S corp, then that $800 a month or a year that you were gonna pay to the state, you should look into an umbrella policy. Because you still have liability regardless of whether or not you incorporate or not. You're still liable for what your company or you do as in business. Somebody trips and falls, or you accidentally cutting a tree and a limb falls on something. And whatever it is.
It's so inexpensive to get an umbrella policy, a liability policy. It's so inexpensive. It saves you tons of money.
Oh,
how much is it, like $400, $300, $500 a year?
On a personal side, yeah, about $200 to $300, depending on what kind of assets you have. On a business side, $500.
Yeah, it's so worth it.
Yeah, and it's cheaper than doing the incorporated route if money is an issue. right? If money is that big of an issue, it's a couple $100 savings, but it's an opportunity to go. And then as you generate revenue, definitely incorporate.
Yes.
Right? It's something that we want to work towards.
Yes.
But it's not an absolute must up front. Although I'm going to agree with you. If you're going to go all in,
it's just mindset. I prefer mindset. Do it right, as you say, from the get-go. Everything, every house is built with foundations. So that's a foundation. Start with the right foot. Unless you're left, so start with the left.
Unless you're left-footed. Jeffrey, off the top of your head, do you remember what next week's stuff is going to be? I have it on my calendar, and I just didn't.
Nope.
All right.
Nope. I think it's on my phone, but my phone's used.
Yeah. Same thing. Same thing is on my phone. Actually, James, you got the calendar, right? Open? Can you look at next week, next Thursday? Because I want to make sure we kind of premise what the next one's going to be.
Next week.
I wrote it on there.
But whomever has questions, send them.
Budget.
Send them to us. And
budget.
That's awesome.
Budget.
That's really good.
Yeah. So this week we were talking about, let's get you started. You have an idea. You're ready to rock and roll. What do you do? If you needed, it comes down to opening the accounts. If you're going to go to the bank and open the account, if you're going to open it under a business name, under doing business as, then you're going to need to go to the assessor's office. It's a 1-page form. I think it's like $35 that you pay to the state. And now you have a DBA. Yep. Do you absolutely need to do it doing business as? No, you can open personal accounts if you're going to stay a sole proprietor, right? But if you do go the incorporation route, fees may vary for incorporating.
And if you're going to go through an entity like an LLC or corporation, you actually don't need a DBA unless the name of your corporation is different as your company operating us, right? So every bank has different requirements, but the most the general documents would be your ID, your social security, the DBA if you're going to have a doing business as, and your tax ID number. That's it. I haven't heard anything other for sole proprietors. If you're a partnership, they're going to request your partnership agreement. If you're an LLC, they're going to request your articles of organization and your operating agreement. If you're a corporation, they're going to request your articles of incorporation and your bylaws. Mm-hmm. And don't do the bank resolution, because each bank has their own bank resolutions. You just sign it there.
Done deal.
Yeah.
And now you're off and rolling. So for week 1, we got you guys at least squared away. You got an idea of, what accounts, how many accounts you should have to get yourself rolling on the ball.
I'll give you clarity.
Yeah.
That's the most important. It will give you clarity at least through the first 6 months until you decide, well, I'm going to do it full time, or I'm just going to roll with it, or clarity is very, very important.
Well, here's the core of what we're talking about today. You don't have all the answers yourself, right? You're not the accountant. You might be able to handle your books a little bit. You're not the accountant. You're not the marketing person. You have your specific skill. And so we want you to focus on that skill. And everything else we can give off to other people to help us get going where we want to go. This is just the little starter points to get you to the point where you can easily see a profit and loss. You're just going to look at the one account. Did it go up? Did it go down?
Yeah.
Right?
And you said it. We are not all accountants. And by saving on an accountant tax advisor, you're actually not saving, because I've seen it with our clients. I've heard it from other Facebook groups, other people. It's like, oh, I'm not paying my accountant. And once we review their tax returns or their books, I'm like, well, come on, this is not a tax deduction, or this is not a deduction, or this should not be an expense. This is actually an asset. And they don't understand. And we explain it to them, and it's like, oh, that makes sense. Now you owe $25,000 to the IRS because you didn't plan accordingly. I would have charged you $20,000 for the 3 years, and it's $25,000 per year that you owe to the IRS plus penalties and interest. So you're not saving money. Don't do it on your own. Don't do your marketing on your own either.
Oh my gosh. Well, it always comes with, you don't know what you cost yourself. And that's the biggest thing. You know what you didn't spend, but you don't know what you cost yourself in not having that professional service. Like the whole thing about having somebody like you guys in their corner is the forward planning, not the reactive. It's January 3rd today? Today's January 3rd. So we are
Second.
Okay, so we are 2 days into the new year, but you are already late on whatever happened in 2019. It's over. That day, that is closed. You can no longer make changes into
We
that
can
sort
clean
of
it
stuff.
up.
We can
Let's clean it up.
but it
That's
already
it.
happened.
That's it.
And when you hire a professional, you're able to clean up the past, but plan for the future.
Yes.
And that's a big thing because that's where you're going to see the big, what that value is for.
But you won't let me lie. Most tax accountants or most people who prepare taxes, they'll see their clients once a year.
That's it.
And they have no way of saying, hey, let me help you, or we could have helped you plan. They can't do it right there and then.
Look, most people in the tax industry are reactive.
Oh, yeah.
Right? And it's their role. Their job is to report what had already happened in the prior year.
Because they don't know better.
Even if they knew better, I'm going to go even a step further. Even if they knew better, the client doesn't understand the value in what is there going forward.
You know what?
So you might have a good tax preparer that is proactive and that can plan. But if you are the person who's like, I don't want to pay that person, I don't want to, that's not, I don't really need that.
Yeah.
You're discounting the value that person can bring into your business.
But you know what? Most of that time, it's because they don't trust their tax accountant.
You know what? And I'll take it one step further with you too.
They're just there to prepare their taxes, and they don't trust them.
And that to me that's scary.
It is.
Because that's one of the biggest things that you're doing is I don't know. I always called it therapy session. So when I sit down with a client, I always call it as therapy because I'm sitting there and they're going to tell me everything, right? And the tax preparer unfortunately doesn't know the client well enough to really take into consideration what the tax implications are for whatever's going on in their life. Now, if you met with them quarterly or monthly, then there's a lot more planning that can go on to that. Yeah. But other than that, you as the client need to come prepared to your tax accountant with questions, like with things that'll get you to the next spot, things that are going to answer whatever it is that you need to plan for whatever it is you're going for. If you, the client, doesn't have the questions, then maybe the tax preparer has the expertise and the knowledge, but since you didn't ask the question, you didn't open that door.
But the question should not be, hey, the other tax preparer that I visited guarantee me that I was going to get $15,000 in a refund. Can you do better? That shouldn't be your question.
No.
That shouldn't be your question. Because I had those questions.
Oh, I have those every year.
But
the other guy said I'm
more
getting $8,000 refund.
No, you're not.
Yeah, no. Well, it's January 2nd. The first peak is upon us here soon.
Yes.
And so right now we're having a lot of people who are hunting down their tax preparer to try to get, whatever it is that you need done ahead of time. And they're going to do things like no, I'm taking it. These people are the people who are going to go and get those payday loans ahead of time. The refund advantage. What is, I forgot what it's called.
Paycheck. Or
it's the product that
the
tax preparers offer ahead of time.
Yes. They'll give you like up to $3,000.
Yeah, whatever it is ahead of time against your refund. Then you come back and file your return. Ladies and gentlemen, if you possibly can, be patient. The interest rate on those things are ridiculously outrageous. And then if you happen to only bring a pay stub that shows a certain amount of income that qualifies you for a refund, but when you come back and sit down, that's not the actual situation.
No, it's not.
You are still liable for all that money plus the interest, regardless of whether you have a refund or not. So, there's a lot of things that you need to ask. Don't go after the shiny thing without asking the proper questions, or you're going to shoot yourself in the foot.
And that interest is not deductible.
Nope.
On individuals, it's not deductible. It's like 30%.
Oh, it's ridiculous.
Yes. Yeah. Don't do it.
So, man.
The IRS might open the season. It generally opens by the third week of January. So just wait.
They've been pushing it a little further lately, the last couple years.
Yeah. Just wait. Get all your tax documents in order and be the first ones making appointments to your tax preparer.
Exactly.
That's
Set the appointment ahead of time.
Plain and simple. And do it electronically and you'll get it in less than 21 days.
Boom.
Just wait.
It'll get there and you'll feel better about spending it.
Sorry out to those companies that are offering those services, but dude, you should not be offering that.
I always like, so my tax offer's in and the bank wants me to do the compliance training, and I'm always hesitant because I only ever really I maybe do like 1 or 2 bank products every year and that's it. But I have it because I know somebody's going to ask me for it. but I feel very unethical.
We don't even offer them. It's not worth it because of just because of us. I hate loans, so for personal, but for businesses it's different. We don't even offer them. I don't agree with them. It's 30%. I'll lend you at 15.
So fun. Boom, yes. There we go. That's how it works. All right. So next week we're going to be talking about budgeting, how to get your stuff in order in the right way, and we're going to be sticking with
go out, get those 2 checking accounts. You're going to need them for the exercise of next week.
There you go. And that's going to be a big process. So look, it's the beginning of the year. You're looking at starting something new. You're looking at doing it right, setting yourself up in the right direction. So now you got step number 1. You're going to open your 2 bank accounts. You're going to set up either your DBA or you're going to think about getting your incorporation. And we're off and rolling. Next step is going to be budgeting. And we're going to be doing that next week on Thursday. So make sure you guys tune in. And if you have any questions between now and then, feel free to write them down, jot them down, drop them in the show notes, or hop on the live next week and shout them out to James. He'll share all those questions with us. So we are here to be of service to you guys.
Yeah.
For the month of January on Thursdays.
January. Love it. 5-part series.
5-part series.
Be ready.
By the end of this, we should be able to be rocking and rolling. You should be out there making some bucks, making 2020 dreams come true.
I love it. For just throw that out there just for fun. Budget is next week, and then we got Shark Tank. That sounds fun. I don't even know what that is, but that sounds fun. And then IRS secrets, and the last one, tax deductions.
Yeah, and we figured the way we wanted to do this, I really like the tax deductions one at the end, because by the time that episode comes in, the IRS will be open. You'll start setting your appointments up with your tax preparers, and you'll have enough information between now and then to ask questions that are going to be useful to not only you to grow your business, but so that your tax preparer can help you at the highest possible level. Yeah. So, guys. Thanks.
Thank you so much.
We're going to be back next week. Oh, yeah. I love doing this. These are some of my favorite topics to talk about.
Too nerdy, but it's fun.
Oh, super nerdy.
This is exactly what we love, though.
Yeah. This is all out.
This is all us.
I do this all day long. I can do this all day. All right, ladies and gents. That's all we got for you guys today. Cool. Peace.
Bye-bye.
And we're out.